So Best Buy is launching a third-party marketplace in the US this summer. But here's the thing, it's not just about expanding its product assortment. Best Buy is actually laying the foundation for a more robust advertising business. Let's break it down. Good morning and welcome to the Retail Media Breakfast Club. I'm your host, Kiri Masters, and every weekday at 6 a.m. Eastern, I bring you candid and real discussions in the world of retail media and marketplaces in just 10 minutes. So bring your own cup of coffee and we'll get smarter about retail media together. Best Buy had its earnings call a couple of weeks ago. So this episode is based on an article that I wrote for Forbes on the same topic. If you want to read this in written form, you can go over to the link in the show notes and check it out. But as of the time of writing, Best Buy just had its most recent earnings call, and there was a lot of discussion in the earnings call and in the analyst Q&A about Best Buy's impending marketplace launch. They actually came out and announced this launch quite a while ago at this point, at least a couple of months ago, which I think really adds a bit of credence to this idea that it's really all about advertising at this point in time. Best Buy itself, the CEO, Corey Barry, even noted that these two priorities, the marketplace and building up its ads business, are intertwined. And she said, the marketplace is expected to provide opportunities for Best Buy ads through new advertisers and increased traffic. And that really is the whole thesis here, is that marketplaces help retailers to build a stronger advertising business. And I'm really happy to call out some really robust research on this topic to underline that claim. But before we get into the research on how marketplaces help advertising businesses specifically, I want to first talk about the fact that this is not Best Buy's first rodeo with marketplaces. They actually, in the US, launched an online marketplace in 2011 and operated it for about 5 years before shuttering it in around 2016. But things have really changed since 2016. Incidentally, this is when I first started out in retail media, around circa 2015. And it was not called retail media back then. There wasn't a name for this. It wasn't a business model for a retailer specifically. It was all about Amazon and Amazon's marketplace at that time. But today, there's a much clearer and coherent path for a retailer to build a marketplace and an ad business on top of that. Best Buy has also been operating a marketplace business in Canada for some time. And so that's something that Corey Barry pointed out in the earnings call. She said, this is one of those places where we have a distinct advantage in that at least some portion of the company has been dealing with marketplace. And one of the analysts on the call noted a statistic that I hadn't come across elsewhere, but they said that 1 in every 4 items is shipped from a third-party seller in Canada. So that's quite interesting. Corey Barry, the CEO, did point out that the model in Canada is a little different in terms of assortment, that in Canada, a lot of the items that are sold through the marketplace are actually refurbished items. And the plan for the US is to have a lot more new items and also multiple sellers selling the same item, which both is a boon for consumers because it drives down costs, but it is really a pain point for a lot of brand manufacturers who want to maintain price thresholds and maintain control over their supply chain and ensure that customers are getting legitimate, high-quality products. Moving on from there, let's now talk about the advertising connection with marketplaces. So while expanding product selection is certainly one motivation for launching a marketplace, the advertising potential may be even more compelling. And this is where we can look at a company that has more recently delved into a marketplace plus ads model, and that is Walmart. In 2022, Walmart CEO Doug McMillon articulated their strategy, saying, growing our marketplace expands choice for our customers, helps our sellers grow, and enhances our profit margins. As we bring more customers, sellers, and suppliers into our ecosystem, it expands our ability to monetize those relationships. And as our e-commerce business, including marketplace, continues to grow, so will our advertising business. So this is the classic flywheel effect in motion here that Walmart has articulated and is seeing really come into its own recently. In its Q4 2025 earnings, which were reported in February this year, Walmart said its marketplace grew 34% in the US year over year, and Walmart Connect revenue grew 24% year over year. That is incredible growth within a company that grew just 4.1% overall. So this is a high margin business. Everyone knows it. It's driving operating income for a lot of these retailers. And so everyone wants to jump in, thus the huge rise in retail media networks. But as I'm about to share with you this research, having a marketplace is a very, very significant driver of advertising businesses within these retailers. So building a marketplace helps to create a more diversified advertiser base. If you think about it, there is, you've got your huge multinational conglomerate CPG advertisers who have big budgets. They want to kind of spend to be everywhere and are a great, anchor customers from an advertising revenue standpoint. But really to grow and really to diversify, it's important to get some smaller advertisers into the mix as well and get them spending too. Just last week, we were talking about Unilever's new CEO coming in and really shaking up that company's advertising and marketing strategy. And that can create a lot of uncertainty if you're a retail media network looking at that. And he's talking about spending all this money on influencer marketing and wanting all of these dollars to be highly accountable. If you're a retail media network that is still operating on a managed service basis, that might be a little bit concerning to you to hear that, your offering might not meet their criteria for a whole lot of investment going forward. So that is, maybe conflating two separate issues here around transparency and technology. But the point is you want to diversify outside of just those big advertisers. So I'm going to draw now on some data that comes from Pentaleap and Coliseum Strategy. I put together a really great research paper that calls out this phenomenon of head, torso, tail in terms of ad impressions. And the way to define that is head, brands are appearing in ad slots at a frequency of 1%. Torso is brands appearing in ad slots at a frequency of 0.2 to 1%. And tail is brands appearing in ad slots at a frequency of less than 0.2%. So these categorize brands into three categories based on their ad slot frequency. So just to run through the numbers here, Amazon has the most diversified set of advertisers with just 11% of their impressions comprised of the head brands and 58% comprised of tail brands. So they have a lot of impressions that are going towards advertisers with lower frequency of appearing in ad slots. Walmart is fairly similar. 13% of advertisers are head and 46% are tail. And then after those two big guys, it really drops off in terms of the percentage of advertisers being tail or even torso. By the time we get to Best Buy, 77% of their advertisers are head. Again, compare that to 11 to 13% for Amazon and Walmart. And only 3% of their advertisers are considered tail. What does this mean? It is all about concentration risk and not diversifying across these different groups of advertisers. And as my friend and fellow retail industry analyst Andrew Lipsman said, talking about this topic, he says, the biggest digital ad businesses in existence today including Google and Meta, also thrive on their long tail of advertisers. This wide base not only provides a sturdy foundation on which to grow, it also inoculates the platform against spending cuts from any single advertiser. So that's really the reason why you want to diversify away from just a small group of big advertisers. And this is why Best Buy is viewing Marketplace plus ads as its next big move. Let's switch gears now to talk about the seller perspective. And I was able to speak with a number of different sellers who are considering selling on Best Buy's Marketplace or, have some thoughts on it. So first of all, Bernie Thompson, who's the founder of Pluggable Technologies. They make laptop docking stations and USB products. And he was very enthusiastic about being among the early brands accepted into Best Buy Marketplace. He says Best Buy is synonymous with electronics. It's a great fit and hoping to make a positive impact for Best Buy and their customers. And then he compares Best Buy to Amazon and hopes that there is an opportunity to differentiate themselves there. He says Amazon has a sophisticated but chaotic curation system, and that has long-standing flaws that lead to an increasing number of fly-by-night Chinese brands on the platform. Best Buy has an opportunity to stand out if it can establish and maintain the big five: selection, pricing, speed of inventory, customer trust, and brand trust. That is a really good point, comparing it to Amazon, the Wild West, certainly for a brand. But in contrast, I spoke with another very experienced consumer electronics e-commerce executive on Background who said that the company they work for has authorized 3P sellers that are eager to sell on the Best Buy Marketplace, which creates channel conflict and ultimately creates a situation where we compete against ourselves. So that is a really good point here. It is Best Buy does, and even said in their earnings call, that they're going to have multiple sellers on each SKU. Like I mentioned, great for consumers, generally poor experience for brands. And the final point from the seller's perspective, Best Buy has said that they plan to roll out fulfillment capabilities for sellers, which I think is a huge deal. And this is the reason why Amazon and Walmart have become so successful with its third-party marketplace, is that they offer this capability for merchants where they store the inventory, they fulfill orders, and that frees up a lot of capacity for resellers and merchants to get on with other things. And it creates a far easier path to be a seller. You don't need to have a warehouse. You don't need to have customer service people. So that creates a really quick on-ramp for new sellers. And it also engenders more trust among consumers when you see that Best Buy is fulfilling that order for you. Another really strong differentiator is that Best Buy will facilitate product returns at physical stores. Some people like to just do everything by mail, but a lot of people will want to go into a store, hand that product over, know that it got returned safely, it didn't get stolen, didn't get lost in the postal system. So I think that is going to be a really strong customer experience, as well as bringing foot traffic potentially into the store as well. So that is my take on Best Buy's marketplace. They seem to be really thinking this through, creating a good roadmap for sellers, a good roadmap for customers. But at the end of the day, it's really about the ads business. And I'm really bullish on Best Buy growing their ad business significantly by investing in this third-party marketplace. Let's see what it looks like in summer of this year. Well, that is it for today. I hope you enjoyed this episode of the Retail Media Breakfast Club. We meet here every day at 6 a.m. Eastern. So be sure to subscribe and get your daily dose of insights, trends, and hot takes in the world of retail media and marketplaces.